dollar is in competition with gold. Gold is the anti-fiat, the anti-dollar. And there's no way you could have silver running to 200, 300, 500, $1,000 an ounce and gold not move. So in order to be able to keep gold in a box and be able to point at it and say, see, gold bad, dollar good, they've had to just sit on silver with paper contracts that are completely unbacked. They came out in the early 2000s.
There has been a significant focus on the shifting global economic landscape, particularly concerning the BRICS nations, Brazil, Russia, India, China, and South Africa, and their movement away from the US dollar. Bill Holter highlights that these countries are increasingly seeking to trade real goods and services for other tangible assets, rather than relying on the dollar, which they see as lacking real value. This change poses a serious threat to the Western standard of living, potentially leading to a significant decline as the dollar loses its global influence. Holter explains how the United States is facing mounting financial instability due to its enormous debt, currently at $35 trillion, which is widely considered unpayable. The merging of the Federal Reserve and the U.S. Treasury, coupled with unsustainable economic policies, has placed the U.S. economy on a precarious path. If the financial system collapses, as some experts predict, it could trigger a severe economic crisis leading to widespread financial hardship across the country. Moreover, the U.S. dollar's status as the world's reserve currency is at risk. The BRICS nations are working on introducing a new currency backed by gold, which could accelerate the decline of fiat currencies, including the dollar. If this happens, the global dominance of the U.S. dollar could end, leading to a significant shift in the global economic order and leaving the U.S. with diminished influence on the world stage. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Is done. I mean, the math is the math. The math is unworkable. There was talk a week or two back that they want to basically monetize the gold that's in Fort Knox and West Point, even assuming that we do have 8,300 tons, which I don't think, I think maybe we have 10% of that or 15% of that. But even if we had 8,300 tons, they want to revalue it from $42 up to the current $2,500, and that will raise somewhere around, I don't know, the number's about $600 billion. And they want to buy Bitcoin with that. And that's supposedly going to wipe out our debt. Well, you're talking about you'd have to have that $600 billion go what, 50-fold or more in order to wipe out the debt? And they're putting it into Bitcoin, which again, in my opinion, it's digital air. It's nothing. And we're going to find out when everything collapses that that's exactly what it is nothing but digital air. Well, that's exactly what's happened. The weaponization, it's not a new thing. The dollar has been weaponized for years and years, and they started ratcheting the weaponization up during the previous administration. And now you've got, they basically stole the $300 billion of Russian treasuries, and they're borrowing or using that as collateral to fund Ukraine. So it's been totally weaponized. And there's been pushback. The pushback has been the formation of the BRICS. And we're only 2 months away from the big BRICS meeting in Russia. And I think that very well could be, if you want to call it the reverse Bretton Woods moment, where the dollar actually loses reserve currency status because they no longer want to trade and use dollars for settlement. And the amount of dollars that have been used in settlement, that's been, it has been declining but it's going to go off a cliff. And especially if they announce a 20 to 40% backing of their new currency, they're calling it the unit. If they back that currency with 20 to 40% gold backing, you'll see pure fiat currencies collapse and you'll see the price of gold explode. Stop, if you will, is November 5th. That's the election. And I've been on record since, I guess, November last year that I thought there was less than a 50-50 or less chance that there'd even be an election, because if it looks like uh, the current administration is going to lose power, you will see some type of enormous false flag so that they can say, well, we would have had an election except for this. And I mean, the BRICS meeting itself, blowing up the dollar, that alone could uh, could throw markets into such a tailspin that they close and they just pull the plug out of the wall.
In today's news recap, silver bar premiums rise to highest level in 9 months. Premiums on gold and silver coins and bars have been on the low side ever since the panic over the 2023 bank failures calmed down. Retail investors have been selling back silver at higher than normal levels over the past year, which had left local coin shops burdened with excessive inventory. That helped to keep premiums low, although in the past 3 days, there's been a substantial change in silver premiums. Matt Riley of EF Bullion reports that wholesale premiums for generic bars have risen from 10 cents to 50 cents in the past few days. A level, he says, premiums haven't reached in at least 9 months. We also talked last week about how Matt has been seeing silver coins and bars melted down into investment bars that are being used to meet industrial demand, which makes it even more interesting to see the change in premiums. Later this week, we'll examine whether the bulk of the retail selling has already occurred. But the premium increase is worth taking note of, as we've seen several periods since 2020 where there's been a surge in demand that's driven premiums higher for extended periods of time. In some cases, significantly higher, such as when American Silver Eagles were trading as high as $18 over spot in 2022. Keep in mind that a shortage of a particular retail product is different from an outright shortage of physical silver needed to make those products. But with the election, the Fed's rate cuts, and the BRICS meeting still on deck this year, it certainly wouldn't be a surprise to see another surge in premium levels. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hit the like button, and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
It is sold short with paper contracts. It's such a small market, Patrick. Total global production of silver is only $20 billion. So it's a very easy market to control. And they absolutely have had to control silver going back at least 30, 40 years, because the dollar is in competition with gold. Gold is the anti-fiat, the anti-dollar. And there's no way you could have silver running to $200, $300, $500, $1,000 an ounce and gold not move. So in order to be able to keep gold in a box and be able to point at it and say, see, gold bad, dollar good, they've had to just sit on silver with paper contracts that are completely unbacked. They came out in the early 2000s with the ETFs. And if you read their prospectus, do they really need to buy any silver or any gold? No, they can be 100% contracts and still be following the prospectus. So they don't have to have physical metal to control the price. They're doing it through paper contracts on COMEX, CME. And if you look at what's going on in Shanghai, there's what, a $3, $4, $5 premium of silver there versus silver here. And what's happening is you're getting an arbitrage where silver is being depleted from the inventories of London, of New York, and it's ending up in Shanghai. And it's interesting to note that the Shanghai inventory of silver just dropped I think they're less than 1,000 tons now, and that's the lowest it's been for quite a while. Or I think it might be the lowest it's been since they started that market. So, long story short, they've had to suppress silver. They cannot let silver look good. They cannot allow the public to stampede into silver, because if that happens, then gold blows, and when gold blows, so does the dollar system.
That's a great point there, Bill.
What do you think of Bill Holter's take? Is he spot on or do you disagree with him? Do you think the U.S. economy will be just fine as usual, or is there a major recession coming very soon? Post in the comments section down below your honest opinion. Subscribe if you've not yet done so. And peep this video right here because you'll love it. I'll see you on the other side.